Bond yields are trending higher, and so is the S&P 500 as the Fed continues to talk about tapering. Here to talk to us what this might mean for you as investors is Brian Barnier. Brian, thanks so much for being back with us.
Glad to be here.
So there's been all this Fed talk, and they're saying, well, we might taper, we may not taper. What are investors supposed to make of this?
So it's the consistent story, because remember, for them, the talk is not just talk, it's a tool.
Yeah.
For a long time, Chair Bernanke has been clear, ever since like last September, really been hitting this hard, that communication is a tool along with the purchases and the more traditional tools. And that's what people are missing. They're looking for sort of top line things like they're back in the days of federal funds rate, and they're not reading through the data all the way through to release to understand. When he uses this car analogy, for example, sort of just easing off on the accelerator,
right,
it's because he's focused on the racetrack. And if he keeps his foot on, it's going to lift right off and fly.
What are some of those details they need to be looking at then?
All right, so for example, he's talked about the state of the economy overall, a lot of emphasis on the labor market. So in the labor market, let's look at two things.
Yeah.
One, for example, is duration of employment. It's been at historic monster highs, up in the 30s of weeks. Now it's come down a little bit in the past month, but that number is still monster. And he's looking at that, and that's listed right there in the minutes. Mm-hmm. A number of things are in unemployment is also looking at the U5 and U6 rates, way up there, historic highs, coming down. But still, that's part of the picture that's there. Also the quality of jobs, jobs with benefits.
I mean, these are things that Ben Bernanke mentioned in a speech on Wednesday. He said, hey, listen, though it's 7.6% unemployment, when you really dig into the numbers, it's still not great. What's he trying to telegraph to the market as people continue to think that maybe they're going to start tapering in September?
Yeah, the message is really about how he is connected to those market conditions.
Okay.
And that's why he constantly says thresholds, not triggers, which two T words that kind of confuse people. But it's that he's focused on what the speed bumps look like, what the banks on the slopes of the racetrack look like, and all that sort of thing. Janet Yellen actually did a very nice speech on this out at the Haas Business School in California last fall.
So when we look at the S&P, we've seen a rise. In July, we're seeing some good numbers again out of stocks. We're also seeing the 10-year note continue to trend higher. I mean, what are investors supposed to make of this? Is that okay?
Well, again, we look at it in the picture, because what he wants to do is match the Fed's performance with what's going on in the economy. The thing that's really crazy, though, is just what goes on inside traders.
Yeah.
For example, right now, just over the last month, the performance numbers for next year built into the S&P 500 have come down a point. They're looking at 4 percentage points less sales 12 months forward than they are looking now. Mm. That's a concern. Also, you're sitting back and looking at the forward optimism rates. Right now, if you compare 12 months forward PE to 12 months back, trailing, we look at an optimistic situation. But then you realize they've been overshooting some group, and then you have these others that are down. So for example, we've dropped almost 4 percentage points in the past year in earnings estimates from analysts.
So then real quickly, what's the biggest hurdle that this market is facing right now, the economic environment?
Yeah, it's that we're not all understanding that this is a game together. Fed policy, just look at your wallet, it's a team we play together. And what the Fed is doing, to use an energy analogy, is basically fracking. Because as they put these things out, they're trying to test the market to get some feedback. And they actually talk about it in their release. They're listening to what people are talking about out in the investment community. So when they hit something, they're trying to see how much steam can come out. Because remember, we're 96% of our bubble top highs right now in terms of valuations. And then trying to understand how they're reacting. So there's this communication going back and forth, and that's what investors need to tune into, and it's all laid out for you if you just read through the minutes. And by the way, read the minutes before you listen to the audio, because the audio, that's the way they were originally written.
All right, Brian, thanks so much. You heard it from Brian. He calls it fracking of the Fed. They are testing, and we'll keep an eye on it. For The Street, I'm Joe Deaux.